and welcome to Sectors Up Close. I'm Natalie Powell. Well, our focus today is metals and mining, and our guest is Max Grinacoff, equity derivatives strategist at BNP Paribas. Well, the metals and mining sector is one of the year's best performers as measured by the S&P Metals and Mining Index. It rose 30% year to date, far outperforming the wider market. It surged in the first half of the year as the economy recovered and metals prices soared. But after peaking mid-year, it languished as metal prices fell back, only to stage a slight recovery this month. Now, there are a few factors at play here, including supply chain issues and efforts by China to contain price rises. But a major one has been inflation. Base metals such as copper were seen as a hedge against central bank money printing and rising prices as the world rebuilds. But that link appears to have broken down even as inflation remains elevated. So what's driving this market and where is it going? Let's ask BNP's Max Grinacoff. Hi Max, well, in your view, what kind of impact will inflation have on this sector going forward?
Yeah, thanks for having me again. So, broad sectors like materials and within that subsectors like metals and mining, as you mentioned, certainly been a big focus for us coming into Q3 earnings season. And of course, following the strong rise in inflation expectations that we've seen of late. Metals and mining and the broad materials sector, very much value oriented, therefore very correlated to the rising inflation and yield backdrop. Worth noting something like 5-year inflation break-evens recently hit 20-year highs. Also inherently correlated to the underlying commodities, of course, so things like copper, which you mentioned, which have actually lagged over the last month. So both materials and metals and mining in particular, up almost as much as 9 to 10% on the month prior to the last couple of days of weakness as yields have retraced from highs. We think a lot of that has to do with the month-end equity bond rebalance, so potentially just a short-term headwind. But we do think there is more room for upside if the current backdrop we're seeing remains firm.
And Max, despite efforts by China to limit price rises, the demand outlook appears relentless, does it not? Especially considering the resources needed to convert to a low-carbon economy.
Yeah, so fundamentally speaking, from our end, the inflation and supply chain disruption-driven rally in the commodities space certainly front and center, certainly topical. With that, we could see winners and losers going forward. But when we look at metals and mining companies in particular, we do believe that the space could potentially continue to benefit from more advantageous pricing power, given where they sit on the supply chain. Also with the infrastructure package currently in negotiations in DC. So that's really in line with our view for pockets, if you will, of inflation in commodity-oriented sectors. And the fact that, when you look at metrics like CapEx spend, rather suppressed through the commodity bear market during the last mid-cycle through the mid-2010s. So these companies are now potentially in this sort of catch-up mode to meet this pent-up demand. But the time to rectify that imbalance in terms of supply and demand is really measured in years, not weeks or months. Downside risks to this view, of course, a hit to demand globally if supply chain disruptions do ultimately end up weighing on business sentiment in the US and globally.
And prices are already quite elevated. Is there any value left in this sector? And if so, where?
Yeah, so it's worth noting that the broader materials space actually screens as the cheapest in terms of valuations relative to any other sector. So trading at a 16 to 17 times price to earnings multiple for 2022, that's actually sub 10th percentile over the last 1 year. So cheap on both an absolute and relative basis. Metals and mining in particular, trading at a sub 8 times 2022 price to earnings. That's at a multi-year low. So higher price, but lower price to earnings. So what does that mean? Well, essentially, that means that the denominator or forward earnings revisions are actually incredibly strong. So when we look at sectors and subsector earnings momentum or the degree to which companies are seeing earnings upgrades or downgrades, metals and mining screens as seeing the strongest, close to 4 standard deviations in terms of the change in earnings forecasts over the last 1 month relative to a 5-year history. And also worth noting, through this week and next, we get nearly 2/3 of metals and mining reporting earnings. So certainly worth watching and seeing if those strong earnings forecasts are justified.
Max, thank you very much. That was Max Grinacoff, equity derivatives strategist at BNP Paribas. Well, before I go, here are some of the top stories in this space. The Hong Kong-listed shares of China's Jiangxi Copper fell more than 5% on Thursday after the company reported a 33% drop in profits in the third quarter. Now, the company did not provide a reason for the quarter-on-quarter decline, but benchmark copper fell for the first quarter in 6 in the 3 months to September, sliding about 5% after hitting a record in May. Australia's Fortescue Metals says volatile iron ore prices, partly as a result of Chinese policies, could hit demand for the metal. Fortescue reported record iron ore shipments in the quarter ended September, but the price it achieved for lower grade ore fell against benchmark prices, which are down by half from a record in May. Steel demand has been hurt by concerns around a debt crisis in China's property market, as well as stricter emissions controls in the country. And finally, the world's top gold producer, Newmont, cut its annual production forecast due to COVID-19 and posted a 28% decline in adjusted third quarter profit. Newmont says it expects its Canadian sites to produce at the low end or below annual production targets due to COVID-related absences. It also said its Boddington mine in Australia was hit by severe weather and operational delays. And that's your roundup of the metals and mining sector. I'm Natalie Powell, and this is Reuters.